Financial futures couldn't have been born without a regulation and legislation. So in 1973, you had the Arab oil embargo. The Arab oil embargo, and you had that coupled with a huge rally in grain that hasn't been seen until recently. Well, you know you've arrived in the United States when you get your own regulator. Then you're a big business person, okay? Then you know that you're at the center of attention. So there was an agency in the Department of Agriculture that administered it, but a new regulatory agency was born because of the hues and cries of consumers over high energy and high food costs. And that was meant to control it. But the question is, what was a commodity? At the time, I was the chief economist of the Board of Trade and worked with our lawyers, and we defined a commodity in such a way and never used the term security. We called them goods and services for future delivery. We also provided that the new agency would have exclusive jurisdiction, which meant no other agency like the SEC could interfere, and thus financial futures were born. As a matter of fact, on October 20th, 1975, the day they began, the Board of Trade the previous day got a call from the SEC and said, you can't trade it. These are futures on securities. It's our province. We had done our homework in the legislation, written in the history, and thus the SEC said, yes, you're the proper authority. We don't go there. So we had the birth of financial futures. Then we had the birth of an agency. So I was the chief economist at the Board of Trade. We had to submit a feasibility study, and there was essentially a movement from all the ag people over to the new agency, and I actually got a form letter from the CFTC which said, is there enough storage space for bonds in Chicago? Because they were thinking about grain elevators, and you need it. And we said, no, don't worry, there's no storage issue here. They're pieces of paper. So there was no possibility of a squeeze. So you educate the regulator. Then you have to go about and regulate and educate the regulators of savings and loans, depository institutions, lawyers, accountants to find out hedge accounting, tax implications, all of those. And then you have to build the member knowledge, the market maker knowledge of the commodity, what moves interest rates, and then you need to design the contract. So we designed something that is now commonly referred to as cheapest to deliver. And the cheapest to deliver is essentially a real rework of yield maintenance and the old wheat contract, which gave the seller the option to deliver the grade and subsequently the location of the commodity. So cheapest to deliver is a modification of finance and grain markets. So the 10-year security, what's the value of these markets? When we started bond futures, the total outstanding long-term debt in 1977 was $18 billion. We started the Ginnie Maes and the bonds. In '82, we began 10-year note futures. At that particular point, the outstanding supply was about $22 billion. I am sad to tell you we issued $24 billion a month, and the total outstanding from 1776 to 1982 was $22 billion. What a difference. What's been valuable about that? The spreads in the spot market were 1/8 of a point. We make a mistake in the futures industry because we don't talk about transparency in the value. As soon as we started futures, we started trading in 30 seconds. That crushed the cash market spreads down to a 30-second, and then subsequently to half a 30-second. Well, that doesn't make any sense to the layman. What does that mean? Well, I'll tell you what it means. Last year, in 2010, let me take that for which I have data, the US government saved $250 million in interest costs as a result of the minimization of transaction costs. Pension funds and permanent investors saved $5.6 billion. So not only were they able to carry inventories, but they could transfer those cost savings onto retirees and other people. Let me go to the last point I want to make. In my case, the institution was there, although we helped build it. The regulatory framework was there. The legislation had been passed. And the design of the contract was the value proposition. With the rights to emit, none of that was there. There was no such thing as a right to pollute. That was created in law with a reaction to the acid rain in the 1990s. So we formed an exchange, called it the Chicago Climate Exchange, and we did the whole 9 yards. That thing required companies to enter into a binding commercial contract to reduce emissions because the government didn't pass any cap and trade program as they did in Europe. None of that was going on. We had to build an exchange from scratch. Then we had to design the contract and find out what was deliverable. And we had to develop the monitoring and the verification and all of those parts of the business. Not a bad thing, and ultimately it worked out very well, and we set up exchanges in Europe, the European Climate Exchange, then one in China, the Tianjin Climate Exchange, and then we sold it to the Intercontinental Exchange for $600 million. So all worked out well, but that's the kind of scope of activities that you can do. So let me conclude by saying, I think that 18% growth rate is matchable. It's not matchable with the existing products because this is now a mature industry. So it's going to have cyclical ups and downs based upon shortages and demand, whether it be money, equities, grains, it doesn't really matter. But I think the future is new products, the same way we grew the business before, which means you're going to need a 7-stage process. I believe the 21st century commodity is going to be water. Okay, and I tell people, and we've gone to China, to India, around the world, there just is not enough water and there's no substitute. So that's going to be the giant commodity of the 21st century. And I tell my kids and grandkids, you want to be in that sector, whether you're in the technology, the trading, any other point. Intellectual property, and I understand my former president addressed you guys. Anything, biodiversity, computer capacity, all kinds of intellectual properties. These derivatives, to conclude, are like hammers, okay? They get a lot of criticism and they can be used to bang people over the head, or they can be used to build houses. There's fantastic opportunity for you. You're fortunately to be in this group that John Lothian has led. Look at this business. The opportunities are fantastic. Thank you.